Hi, and welcome to the Market Alert for Thursday, the 14th of July 2022. So a lot to get through today. CPI numbers out yesterday, worse than forecast. So let's get started. Soaring CPI sparks Fed policy error panic across markets. This will not end well. Yeah, on many occasions I've been asked by people, how does it end? And I always give the same answer. Spectacularly is how it's all going to end. Here we've got, just off the screen actually, let me just shrink this down a bit so that you can actually see it. There we go. So US hot CPI print spurs market pricing for 100 basis point hike. Everything is in play. Stocks sink after Fed Bostic cites concerning CP. Top line number is a source of concern. God, don't you just love the way they actually comment about these things. Stock spike after Fed leaker takes 100 basis point rate hike off the table. Now, so we've gone from what we've just seen there, that's later. This was earlier on in the day, as you can see here, because they brought the market back after it declined. Again, we'll look at this in more detail in just a moment. But this chap here, I don't know which one he is, but he was saying, oh no, hang on a minute, we better take this off the table. I don't know why. I don't know why he actually said they would take that off the table. You thought they would actually increase rates to try and get the inflation down, but obviously concerned about the economy. They'll soon be back to printing. Give it, September, that sort of area, September, November. Bonds and stocks rebound as market prices in full rate cut. You can see the contradictions. They send out some Fed bod, I'll put it politely, who then says, oh no, we're taking it off the table. And then then the market justifies its actions by saying actually 100 point increase is what we're after. So there we go. News today, like I say, we'll look at the CPI numbers in a moment. News today, economic forecast. There's a lot of those, isn't there, around at the moment. PPI is out at 130. That's to show same as forecast. And they got the core PPI. Also trying to show the same, and then the weekly unemployment claims, and Waller speaks at 4 p.m. So let's just go back to yesterday, have a look at the CPI numbers. Came out at 1.3. Here's your chart. You can see that we've got steady climb there. What's interesting is that the CPI had already moved higher. This is, you can see from this area here, this is pre-Ukraine war, and then you can see it's barely moved up since the Ukraine war, but they keep using this as the excuse for all of the increases, but it was rising way before the Russia-Ukraine war. Again, it's that smoke and mirrors, isn't it? So let's just have a look at the market's reaction to this yesterday. I recorded it just as it was released to show the impact. So here we go then, we're in the Dow 1 minute, because that's where you see the biggest impact. This is the news item, the CPI numbers, and then the news comes out, and this was the market's initial reaction. You see prices shoot up there. They've gone up from, let me just mark this up, we've got 100 there, 200 points, and then the market dropped 500 points, wasn't it? Let's just have a look. There's the numbers coming out, and there's the low. So actually I think it was, just make sure I got this right, 100, 200, 300, 400. Yeah, so it was 400 down, 200 up. Massive swing there. And if we move on to the Dow, you'll be able to see how this was actually priced in. You can see there in the daily chart the market trading down to 89% retracement that we had drawn in yesterday's market alert. The market stopping there and then moving up overnight as well. So here's that same thing, but in a 30-minute chart. You can see how long it lasted. The Dow opened, they brought it back to the S2 or just below, and then the market was brought back on those initial comments from that bird brain from the Fed, saying that the 100 basis point was to be taken off, increase was to be taken off the table. And then, of course, the market then reinforced it. But you can see that the market didn't really believe all of this nonsense. You've got your retracements there over So the market coming back 78% there, and now starting to move to the upside. Needs to take out the DP in the 50 EMA in the 30-minute chart in order to move to the upside. But certainly looking that way at the moment, and it's just a matter of waiting to see what the European markets do. It's whether we get a bit more of a move up and then reality kicks in and we move to the downside. You've got to trade what you see on this one. It's very difficult to predict where the market will go today. That said, I always mark up both ways, so this is the targets for the upside. We already have the downside, which is going to be this 89% retracement. If the market goes through that, then we'll see prices move lower. In the German DAX, the market retracing 62%, not as much as the Dow in the daily chart, because obviously it's not initially affected, or Europe is not affected by it from the announcement so much. Certainly long term, the impact is going to be massive. So you get these smaller pullbacks, and you'll see the same in the FTSE in just a moment. So yeah, we've got demand there for yesterday. The market starting to move higher. If we look at the 30-minute chart, again you see the same thing. Not as big a pullback in the DAX. The range there, we've just gone up just above there, haven't we? 100, 200. So just about 230 points range there for the DAX compared to the 700 swing in the Dow. Market retracing, oversold, actually went below the double bottom there. And then again, those comments from the Fed were leaked, and the market moving to the upside above the DP, stronger than the Dow in the 30-minute chart at the moment, but we do have an 89% retracement for a pullback to the DP area there when the market opens at 7 a.m. In the 5-minute chart, you can see a bigger reaction there as well to the DAX. The market was okay during yesterday. We had a bit of an up and down movement. As you can see there, then the market went into a sideways move, which you'd expect, waiting for the Fed. There's a bit more of a detail there. You'll see the demand. If you look closely in the smaller time frames, you will find the turning points from the bigger ones. So in the 30-minute chart, where the market comes down and tests here, you go to the 5-minute chart and you'll find the demand there, and it's oversold, crossover, and we start moving to the upside. And that's all I do, is I use like what I call the Russian doll approach. Start with the big time frames, work your way down, and then you can time the trade in the smaller time frames. And yesterday's results, or rather the week's results so far, not a lot, as I say. I've been busy doing other building work and whatever, and that needs doing, but still great for the week. 2.2, and we're at 80%. Sorry, wrong one there. 65%, 35% win to loss ratio. But longer term, still continues to move to the upside there, with 55-45 win to loss ratio, 2.34 profit factor, which is the important thing there, and 21,395 in profits. And in the S&P, exactly the same as the Dow, trading back to just below the 89% retracement that we drew in yesterday. The market finding support and moving to the upside now. Very important that we hold at this level. And again, I would be inclined to draw in the fib retracements here to give me targets for the upside should prices continue to move higher today. 30-minute chart, again, you can see the impact of the news items up to the 200 MA R1. Market slammed down to the S2, which ties in with the 89% in the daily chart. And then you can use smaller time frames, as I've just shown you in the DAX, to actually drill down and time these. Again, you from here to here, you've got a retracement with overbought. Then we come back to oversold, and the market's managed to move higher. In fact, the S&P has got to the DP, whereas the Dow hasn't yet. So again, also interesting there. And as I mentioned about the FTSE, this retracing just 62% yesterday, looking strong overnight as well, needs to break out to the upside. That being the case, this would be the first sort of retracement area. So let me just draw that in from there to there. We're through 38 at the moment, And there you can see that we've got to keep above these two averages, which is the 20 bar and the 5 MA. You can also see that at the high there we've got the 50 EMA if prices move to this level. In the 30-minute chart, the market down initially yesterday, and then obviously CPI numbers. Again, you've got your retracement inside of there, back up to 78% retracement at the close, overbought with divergence, and crossover back to 89% from here to here, and then making its way back. And at the moment we're at 89% retracement here as well. I'll draw that one in for you, but you just get to actually visualize, and you can actually just see where the market is and actually guess where the retracement is. It's just something that comes naturally after time. So there we go. So the FTSE already way above the DP, very strong by comparison, despite the fact that there's chaos in the government. But then again, why should that matter? Get the stock market back to the upside. Finally, the metals, silver up yesterday, which you'd expect, but it's going to get crushed today, and I'll show you why in just a moment. They'll continue this to the downside. Now we're up to a 1 basis point increase in rates. The dollar's going to increase. The metals are going to get hammered. However, one thing that I will say, they seem to be a bit of resilience coming into the market. Given the opportunity over the last few days with the dollar rising, you think they'd actually been sent down to $18 an ounce, but they seem to be holding quite well, which is interesting. But today, expect the low to be taken out in this market. Oh, speaking of which as well, while we're on the subject of the silver market and metals markets, let me just show you this. JP Morgan, as you can see there, JP Morgan traders are in hot water for manipulating the gold market. And of course, if you're manipulating the gold market, you're also manipulating the silver market as well. This is a court case that's going on at the moment. I'm not going to go into it, but there's plenty being written about it as well. So again, what we're looking at, they're charged with racketeering, conspiracy, as well as conspiring to commit price manipulation, wire fraud, commodities fraud, and spoofing from 2008 to 2016. We know it's still going on today. You only have to look at the 1 p.m. fix, don't you? But obviously disguised for those that cannot see it. Bizarre. So there you go. That's currently happening. The last time JP Morgan were fined 900 million for this same activity, and people say, oh, there's no manipulation when they're dishing out the fines. I still think that there's probably complicity from the agencies as well, but it'll all come out in time. But there's so much for being the conspiracy theorist that I've been purported to be. It's now actually seeing the court cases come out as well at last, but of course it's peanuts what these get fined with what they actually made in between, and nobody really goes to prison either, except this time they may just do, but we'll have to wait and see. So yeah, silver I suspect is going to retest this low because the US dollar, if you just have a look at it, you can see today is already putting in the price activity where it's likely, or price action where it's likely to take out the high there of 108.37. That's sort of consistent. And the other thing is as well, it came off the low yesterday to stay above the 5-bar moving average in the daily chart. If you were to drill down in these, again, you'll find the buying at this level where the market came back up. Gold yesterday also being slammed to the downside, brought back with the CPI news, and also weak overnight. So watch the low of this bar for yesterday, 1,706. So $1,700 really is going to be the next downside target, which is staggering given the market had moved up to 2,000, over 2,000. So there's your reaction, slammed down, brought up, and now making its way. Watch the low, like I say, $1,700 an ounce for this because of the dollar strength that's going to come with the increase. I think it's the 27th of July when rates will actually be announced to increase by that full 1 basis point. And here we go for crude oil. Still trying to get back, or just trading at $100 per barrel there. Big demand yesterday. Incredible, isn't it? It goes to show that there's no shortage of crude, whatever, but the price at the pumps still remains excessively high. That's all I'm saying. Right, that will do it for this one. Let's see what the market's reaction is to yesterday's CPI numbers. Hopefully we'll get a bit of a rally and a good sell-off. That's what I would like, but I've got to trade what I actually see, because there's no other way. Because once you have an opinion about the direction that it could go in, then you're scuppered. So you've got to trade what you see, and that way you'll trade in harmony with the market's activity. Okay, that's it. As ever, thanks for watching. See you in